We've gotten some amazing news yesterday when the CPI printed. Now, the CPI is your inflation data. And year on year, this is the chart of a year, we are now down 3.2%. Now, these aren't obviously the real inflation numbers, but we need to be cognizant that this is the news they're giving us, right? So the CPI print was yesterday, and this negatively infected the US dollar and everybody holding stable coins in crypto, as well as their dollar value is now dropping significantly. And on top of that, all risk assets, including the stock market, the S&P, NASDAQ, all are rallying off massive lows, massive recent lows, when everybody was calling for a recession. Do go check out my no recession video, and I will link it in the description, or I will link it in the video above. So inflation print at 3.2, still going down. The Fed mandate is to keep it at 2%. If we get to that, we are not sure if they will reach that target or they will readjust their target, but 2% is what they're looking for. This will have a massive impact on the possibility of another Fed hike. We're looking at 95% for another pause and not a rate hike in the next meeting. So that's another bullish thing. With that news, this is the daily of the dollar. We had this measured move that we've talked about in previous videos, almost hit at 3%. This is the 50% of the overall range. So this target is almost hit. This is very good for risk assets and other foreign exchanges, as the euro, the pound, all will be rallying on this breakdown. This is major support that has been lost on the daily. And on the weekly, the last time we did come down to these areas. Now it's not loading, but that's fine. Everybody was calling for the collapse of the dollar, etc. And now we've rallied up and we are finally now pulling back down, which is really good for our risk assets. On US oil, this is another one that is very important for inflation to come down, because the more expensive oil is, the more expensive it is to travel, to transport products, and a vast majority of modern products are built and made with oil. So breaking down here, we're having a little bit of a dead cat bounce, but we expect it to get all the way to 70, giving the stock market and risk assets a nice boost to the upside. So here we have the S&P in the last day. Let's just go down to the hourly. So on the weekly, up nicely. On the recent high, we are only a few basis points off the top. That's 2%. And from the all-time high, we are about off 6%. So almost at new all-time highs. We'll probably see all-time highs either this year or early next year. From this recent low where everybody was calling for a recession, we're up 9%. All this was a retest of the previous breakout point right there. It was a double percentage pullback, just above 10%, but the market has shrugged that off and has now rallied pretty violently. Massive gaps have been left in this. It doesn't mean it has to get filled, but this is very powerful, as everybody that is sitting on the sidelines now have lost a significant amount of money, as they're sitting in the dollar, which is losing value versus everything else, and the risk assets are rallying as well. So for Bitcoin, we won't really see any significant moves above the all-time highs unless we see in the stock market a higher high over here. Once we get a higher high and we start getting back into price discovery, you'll see some of the the risk appetite increase in investors and move to lower cap speculation like Bitcoin. So that's the S&P. The NASDAQ over here has even almost blasted past the recent highs. We're 0.5% off the local top here, 5% off the all-time highs, and this recent rally from the lows is up 12%, a massive 12%. All down here, everybody was calling for the recession. All the bears were excited, and we've just left them all behind again, destroying their portfolios while they sit and hold and wait for a recession, which might never come, or we've already might have had it. So BTC still down 48%. We've had a recent rally, but now pulling back a little bit. It has been interesting to see how decorrelated BTC has been to the rest of the market. We've now pulled back a few percentages, while the rest of the market is absolutely moving. So down 6%. I would not be surprised just to see if we come and retest these breakout levels. I am a bull, right? But it might seem that I'm a bit bearish. But all I want is a very sustainable run to the upside. Nothing like that what we had in 2019 and 2020. We just ran up very, very quickly, very unsustainably. We had very few pullbacks, very low percentage pullbacks. And when we finally did top here in June of 2019, we had to come back. Now, they made, this was the virus news, right? But this chart was unsustainably running very quickly. So it needed to come down. It came down to retest its base at 4,200. And then we were off from there. So something more sustainable like this over here, the last part of the accumulation phase. So this cycle has been much more sustainable with run-ups, really good pullbacks, run-ups, nice pullbacks, and spent times under resistance points, giving us enough energy to push through them. So we'd like to have the same thing going forward into the future. Remember, the longer we move sideways in the accumulation zone, the more violent the move to the upside will be. We are a little bit early in this cycle, especially for the altcoins. So if we can come back and retest these levels, that would actually be very, very bullish, right? Pullbacks don't have to be bearish all the time. They are bullish sometimes as well. So BTC lagging a little bit. Let's see if it can catch a bit once we start making all-time highs in the S&P and in the traditional market. And we can see strong moves to the all-time highs next year. So let's build a sustainable base here and move out into the next year. Here we have the total 3, and this looks a lot like the end of the Wyckoff accumulation, where you hit a resistance, spend a little bit of time here moving sideways. This is called a sign of strength as buyers come in here. So this is this part where we are in here now. We can see a nice rejection at this area. Let's spend some time moving sideways in this on the sign of strength, so we can move up higher into all-time highs and into price discovery in 2024 and 2025. This is the time to look out for altcoins that you are interested and getting them on pullbacks. With that being said, thank you for watching this video. I hope you learned something. To remember to always play from a position of strength. Do not get wrecked. The bull market still has to really play out. We're only about 30 to 40% into the cycle. There's still a lot of time and gains to be made. So do not get absolutely destroyed. Be patient, go slowly, and we will get to 2025 eventually. Thank you for watching, and bye-bye.